and do some trading with Alan Nuttman. He's the chief market strategist at St. Paul Research. Alan, let me get your thoughts here. Firstly, on the market, which is just kind of blowing in the wind right now to the downside. What's going on, Mr. Nuttman?
V recovery. So it's a complete comeback in all the major markets, which is a big deal. But this is not the end. This is just the beginning. If you look at the history, what's happened in the past, every drop from the top has rebounded that distance on the old high. So if we look at the S&P, it was a 1,200 point drop from 3,400 to 2,200. That target's 4,600. So still another 10% up above in the S&P. And this dollar dive, that only helped this stock surge.
Okay, so the dollar dive this morning, you got any thoughts on it, Alan? Where it's coming from, reason, rhyme, why, or what it means technically now that we're heading back towards 91?
Well, I was very skeptical of the rate rise, and everybody being on one side of the trade, guaranteeing inflation and guaranteeing a run up to 2% of the 10-year yield. That had everybody on one side of a trade, and since that time, you realized that things aren't going to happen as fast, and the dollar's actually been in a downward trend for over a year, where it was above 100, and now it's come back down. So 91 is kind of the halfway point of this recent leg. If it breaks below 91, then you could see a test of those lows, and that's very much a positive for stock.
Okay. This morning you're trading Uber. Let me guess, Alan, you're long.
I'm an optimist, all right? I find stocks that have taken a pause and look like they're going to make another leg higher. Now, we did this at Oracle a couple weeks ago when you were somewhat questioning, the tech takeoff.
I would never question you, Alan.
Okay, so, and Oracle came up, rallied, and made new highs. Same kind of thing here. This is a stock that's taken a pause. It's been between 50 and 60 for 5 months. That's after a 300% run-up from its dire depths. So what I'm looking at here is leaning on that midpoint of that 55. The 55 call for June is the Uber play. It's trading for about 7 right now. It's about $5 in the money. Again, in the money option that gets you that payoff. And we saw that example in Oracle, kind of same thing. The modest move in Oracle, we saw 100% gain in the option. That's the way we like to play this market.
Okay. The Oracle move was pretty great. I will say that. A major run still going on this morning. So you're using the 55 calls for Uber in the money per usual. And then a target of what, Alan, where you want to get out of this trade past the $64 highs?
Right. So what I'm looking for here is I put in a first target at a 50% gain and a second target at 100% gain on the option, which requires only a modest move. So what I'm looking for here is a breakout above the 60 range. That target's 70. If Uber's at 70, this 55 call is worth 15, so it's more than double. So let's see where we go. But this has been a very strong stock, and looks like Uber's ready to drive once again.
All right. I like that. Okay, Alan, bullish Uber and on a hot streak after Oracle. Nice work, Mr. Nuttman. Thank you, sir. The 55 calls in Uber looking for a breakout. The chief market strategist at St. Paul Research. When we come back, let's talk about which companies to avoid. Instead of trying to pick the biggest winners, how about just leaving out the worst? But that also, of course, means that you find companies you like the most. So from our next guest, we'll take a look at an ETF that gets rid of the worst companies and